So both Bitcoin and Ethereum realized vol did drop by about 10 points this week. We had kind of seen that coming given the Thanksgiving holiday and those upside resistances holding, spot drifting back to the middle of its ranges. So we've got the realized vol coming down, implied vol dragged lower with it as well, particularly in the front month expiries. Short gamma players coming back in, hunting for that theta to earn over the expected quiet period of Thanksgiving. And we did mention last week that positive carry on Bitcoin meant that you're probably going to see the sellers come in on Bitcoin. You didn't have positive carry on ETH, you had negative. So arguably it was a little bit less clear that you wanted to go and sell a load of Ethereum gamma. Now Bitcoin carry does remain positive and ETH actually remains negative, which means the implied vol did come down in both of them. And that's why the carry, hasn't improved. If the realized vol just came down and implied stayed where it was, then the carry would get bigger and it would look more attractive to sell options, right? But if the implied coming down as well, then it keeps the carry a little bit more stable, and that's kind of what we see. Okay. Now using short dated weekly calls to systematically overwrite long exposure has been my strategy. That's what I've been doing, and that's been working really well recently. And now that the market seems to be pricing in a bit more chance of a January approval on the ETF side, I think this strategy still has scope into year end. So I've got no real reason to stop doing it. It's been working for me, so I'm probably going to keep doing it. But like I said, I don't really feel a need to smash out a load of Ethereum vol because, like I said, if and when it breaks 2150, I just think the move could be really quite brutal. So I'd rather just harvest that theta in Bitcoin while I wait for a bigger move, basically. Okay, so that's kind of what I'm seeing on realized. If we jump into the term structure, it was absolutely hammered this week. So we had front end Bitcoin down about 8 points, 8 to 9 points. You can see here. Rest of the curve down as well. So even January, which is where see this kink on the curve that's forming in January, is basically saying that the market expects the news to happen in January or in that month of January. And that those key dates for the SEC are somewhere around there. But now they're still selling that vol. So that vol was still down 5 vol points. So the entire curve was coming down to some extent. It's just that the back end was coming down less, which is quite normal. That back end now is sitting at around 60 vol. And like I said, the kink is for January. So that's telling you something about the options market expectations. Looking at Ethereum, similar story, shift lower in vol. We had about a 7-point move in the front. That January only down 3.5 in Ethereum, and then the back end similar story. So back end vols are both at around just under 60 in both Bitcoin and Ethereum. If we jump over to the relative value side of things, you can see here that the ETH Bitcoin vol spread did have a small bounce this week, but we're talking very small, right? Nothing to write home about. And that was just this bounce here. That was only really just because Ethereum vol was falling less than Bitcoin. So all the vols were lower, but Bitcoin was just more offered than Ethereum was. Now the realized vol is still up here at plus 10. And that is starting to get a bit persistent, right? Because that's both on a 30-day and a 10-day basis. So the fact that the realized vol is parked up there at 10, and yet the entire curve is just trading at flat, is partly because there's that memory in the market of how Bitcoin has been the driver all year, okay? But if this realized keeps staying at plus 10 for ETH, it's only a matter of time before this spread starts to live at 5 or 10 vols again, like it used to in the old days, okay? So I think we need to monitor this and see how it plays out. But in general, it does look like the ETH vol is the one that's offering the best value here. Now, a lot's going to depend on the ETH Bitcoin spot spread. That's sitting about 5% off that key support zone, which it bounced off. If it was to break below that, then maybe ETH has a problem again. And I actually think it only really breaks below that if Bitcoin flies to the upside and leaves ETH in the dust again, right? But I think the dynamic has now changed. So I think that if Bitcoin does fly to 42K, which say call it 10% plus from here, I think ETH's going to go with it, in which case I think the ETH Bitcoin cross is going to rally. And I think this vol spread is going to stay where it is or might even go higher for Ethereum. So that's kind of my expectation. Okay. Now, we did see some overwriting flow come back on ETH, but it was centered on December 29th. We think the supply of 2024 options is going to be less forthcoming. We'll see if we're right on that call in January because of this large upside tail that exists. Obviously, if overwrite has already been burnt on the way from kind of 1600 to 2100, they're going to be maybe a little bit shy now to like go and sell too much in January, knowing that if Bitcoin gets its news and ETH breaks the level, then ETH could quickly go above 2,500, and they're just going to get carried out on those upside shorts. So while selling December upside kind of makes sense because we're probably not going to get the catalyst between now and year end, I think selling anything in Jan to March is probably a bit more dangerous, and therefore I just don't think that amount of vol supply is going to come quite as easily. All right, that's how I would envisage it happening. I will let you know if I see anything that contradicts that. And then closing out this analysis on the SKEW side, so BTC Core SKEW holding up better than Ethereum this week. Both assets obviously fading off their highs in terms of spot. BTC SKEW down to about 4 vols call premium in the short end of the curve, and that extends to around 9 vols in the back end. That back end is obviously the bulletproof call SKEW that hasn't gone anywhere for ages. Ethereum SKEW, though, has lost most of its call premium in the front. You can see that in the 1 month. So you can see the yellow line jumping up here. So a bit of a SKEW differential between Bitcoin and Ethereum, where we're talking about sub 2 vols for Ethereum front end call SKEW, whereas Bitcoin's still holding at around 4. And then looking at the longer end of the curve, you've got both of them at around 6 to 8, basically, right? That's on the 3 month part of the curve. And if we go even longer, they're at like 8 or 9. Okay. So in general, the option market's saying, yeah, we don't really think ETH's going to explode between now and year end. Bitcoin's got slightly more probability of having a move, although we're still not really buying it. But come January to March next year, we do not want to be short upside because this thing is likely going to have its next major leg higher. And that's kind of what the options market seems to be implying. Now, I'm a strong believer that these call switches between Ethereum and Bitcoin that I've been talking about, long Ethereum calls, short Bitcoin calls, still one of my favorite plays for next year. I would use out of the money, quite far out of the money options to play it in that sort of 10 to 15 delta area to reduce the noise of that trade so that you don't really have options that get too meaty unless you get a really big move of 20% plus. And I don't really think the 20% plus move is happening in Bitcoin. I think it's more likely to happen in Ethereum. So that's why I would go far out of the money. So I haven't pulled the trigger on this. I had some expiring in November. They didn't make me any money, but they didn't lose me any. There was zero cost. I'm probably going to pull the trigger at some point again in this call switch. I'm probably going to look out to March 24 to give myself plenty of time for something to happen. And that will be what, but right now I'm not doing anything, waiting for a little bit of Bitcoin outperformance in the near term, see if that can happen, and then maybe use that as an entry point to get into that spread. Okay. Right. So that's the vol analysis. In terms of strategy compass, we're kind of moving back towards the middle here. So obviously it was looking a bit pumped up there in terms of spot and vol. Vol's on its way back down, as is spot. So things are getting a bit more neutral. So just kind of mean reverting both in Ethereum and Bitcoin. And then in terms of flows, we've got some different looking charts up here. These ones are quite good because they kind of show us the direction a bit better. So volumes in BTC options continuing to trend lower as they have been for the last few weeks, down another 8% to around $6 billion notional. The biggest clips we saw this week were a seller of a Jan 32 27K put ratio, buying the downside. So you can see selling the 32 strike and buying the 27 strikes. That's buying that deep downside wing. Now, the point of doing that is to get crash protection in case something unsuspected happens, right? So that's a vol player basically saying that downside vol looks cheap, okay? Not someone who's really particularly bearish. Now, we also saw sellers of the 8th of December, 40, 42. So that's this, and that's a ratio as well. So again, people kind of buying the upside wing in that 42K area, but doing it in the really short end of the curve out to 8th of December. We also saw March 45 calls. That's quite a dark blue on here, means quite a lot of cumulative Vega being bought because March has obviously got more Vega on it. So we've got these 45 strikes color coded in yellow. That's the March outright buying of the 45K calls. And then we did see a little bit of November expired now, but November last Friday, 35K strike puts got bought as well. Okay, but in general, if you look at where these bars are, if they're in the positive, it's buyers of options, and if they're negative, it's sellers of options. So you can see where the selling has been going on. You've had quite a bit of local selling in that 37 to 38 area, And then you've had buying of upside across various expiries, and then you've had some of these wings bought in January, basically. So that's kind of what we're seeing in the Bitcoin flows in terms of the big block trades. Looking at the same story in Ethereum, we've got down 10% volume as well, down to about 3 billion, so about half of what's trading on Bitcoin. Now, the major flows were a big chunky seller of the 2100 puts in December. That's this big orange bar here. So it's kind of supplying some gamma to the street. And then the other monster trade was these 30,000 lots of some March-June calendar diagonals. So that was the 2800s in March versus the 3000s in June. So that's these big bars here, as that looks like a bit of a roll of a long position. And then outside of that, we had some outright call buying in December, 2300, 2400 calls, and some January 2600, 3200 call spreads. So generally quite bullish flow if you look at it like that. Yeah, pretty much all bullish flow in Ethereum there. Okay, so that's what I'm seeing in the flows. How is that kind of filtered through into gamma positioning? Well, as I said, that supply of gamma, particularly in those Ethereums on the December, has kind of balanced the street out a bit. So you can see the Ethereum dealer gamma, which had gone negative and had started to create a bit more realized vol, has gone back into positive, right? As these big strikes get sold back, these big blue bars are the December options that get sold to the street and kind of balance out some of these other shorts that the street had. So we're definitely seeing a kind of normalization in Ethereum gamma positioning. Whether or not that translates through lower realized vol, we will see. Obviously, we've just had Thanksgiving and it dropped by 10. We'll see how it plays out this week if it continues to do the same. But jury's still out on that one right now. I suspect it probably does dampen the realized vol, just because I don't see a major catalyst between now and year end. So, let's keep an eye on that. In terms of dealer gamma on Bitcoin, still very slightly negative, not as negative as it was, but it's because we've drifted lower back towards 37, and some long strikes at 37 and down at 35. Whereas if we were to bounce and rally back towards 40K, that's where these short strikes will kind of come into their own and dominate the positioning, and we'll go back to more short dealer gamma in Bitcoin. So it does look like Bitcoin's a bit more imbalanced, and I think that partly explains why the call skew is a bit more persistent in the front end of the curve, because there's these upside shorts in the front end still for Bitcoin, whereas Ethereum looks much more balanced and much more neutral right now. Okay, so that's where we are on positioning. That's the summary for this week in crypto. Thanks a lot as always. I'll catch you guys later.